Bitcoin, safest, most secure. We think from here, it's easily a 10x. If Solana, which says they fixed their problem, if Ethereum was invented today, would anyone use it when you can use Solana?
Solana is a blockchain platform designed for decentralized applications and crypto projects. It is known for its high performance and low transaction costs. Unlike other blockchains, Solana uses a unique consensus mechanism called proof of history, as well as proof of stake. This combination allows for faster transaction confirmation times and scalability. Developers often choose Solana for projects requiring high-speed transactions and low fees, making it a popular choice in the rapidly evolving world of decentralized finance and other blockchain applications. Historical Solana price data can be tracked to make Solana price forecasts. Solana started 2020 lower with a significant increase in 2023, reaching its peak in November. Predicting the future price of any cryptocurrency is a difficult task, but many experts believe that Solana has the potential to continue growing in the coming years. Some price predictions estimate that Solana could reach new all-time highs by 2024. In today's video, we will tell you about Mark Yusko's view on Solana, as he thinks that Solana can easily give a huge ROI sooner than we think. But before we get into the video, make sure you subscribe to our channel and press that bell icon to never miss an update. All people's wealth should be in stocks, and equity means ownership of assets. So corporate capital could be public capital, it could be private capital, it could be real estate, but the equity part, not the debt. If someone is under 65, especially because of their retirement assets, it should be illegal, literally against the law, to have bonuses in a 401k. It should be all about capital, because they are long-term assets. We have all lived our entire lives in a fiduciary world, and the fiat world is a currency. And since then, Western banks have devalued their currencies to steal wealth from the masses and give it to those at the top. That's all it is. It's inflation. This is a stealth wealth tax that enriches the rich and makes the poor poorer. So how do you defend yourself? You could own things, you could also own capital. And you could borrow, like use your house or your stocks. And you could earn. So you could earn more than the government took from you. But the problem is that half of the people don't own stocks. They don't own their homes, they rent, and have some sort of fixed income. They earn a minimum wage, or a wage that doesn't increase much. Bitcoin is coming, and the aha moment is that Bitcoin is an anti-fiat hedge. This means that a Bitcoin is a Bitcoin and will always be a Bitcoin. It is a permanent, immutable ledger supported by the most powerful computer network in the world. But we don't value Bitcoin in Bitcoin. We value Bitcoin in dollars or euros, yen, pesos, or bolivars. If we take the simplest example of Venezuela, if you live there, all your wealth has been stolen because the currency has fallen by 99.99%. Maduro and his companies have stolen everyone's wealth. The same thing happened repeatedly in Argentina due to currency devaluation. The price of Bitcoin and Bolivar is only increasing because Bolivars are becoming less and less good. It's something like that with inflation. In 2020, the US government printed $10 trillion out of thin air. They listened to Stephanie Kelton and she said, print whatever you want, it doesn't matter. So what should have happened? The price of silver should have been cut in half. So what should have happened to the value of our home? It should have gone up because we don't price houses on houses. We value homes in dollars. What should have happened to the stocks? They should have gone up. What should have happened to gold? It should have gone up. But why hasn't gold increased? Because the big banks counterfeit gold to keep it low, because they sell it short and make a lot of money from it. But in short, Bitcoin has doubled what it should have done, because in the United States, we don't value Bitcoin in Bitcoins, we value it in dollars. Bitcoin can protect most people from the ravages of inflation relative to the rest of their wealth. 24% of millennials own them, and in some cases, this is a very high percentage. And that's good because they protect themselves from the ravages of inflation. Because the only other way to protect yourself is to simply spend money. Then you collect the money and spend it before it goes down. If you're accumulating and appreciating assets, if you invest 1% in Bitcoin over the last 10 years, the first 5 years don't matter. It wasn't liquid enough. But the last 10 years matter. They were old enough to be able to buy a lot. During these 10 years, if you had put 1%, 0.5% in stocks, and 0.5% in bonds, your portfolio would have gained 200 basis points more. So there were 12 instead of 10. But above all, their overall risk has decreased. Then its strong ratio, its return per unit of risk, increased. But Bitcoin is volatile. But it is not correlated with other assets. It is correlated at 0.0 with bonds, at 0.15 with stocks. So, when we apply Markowitz's theory, which is the financial asset pricing model, we take the riskiest asset in the world, cash. This is the riskiest because every day you own it, your wealth is stolen due to inflation. So if you add bonds, your portfolio risk actually decreases. Although volatility increases, risk decreases because the return per unit of risk increases. If you add stocks, the risk decreases. If hedge funds are added, the risk decreases. If risk capital is added, the risk decreases. Add private equity, the risk goes down. When you add Bitcoin, the risks drop significantly. And then the 1% is the base layer. You must have one, but some would say that it's not zero. That something could happen that would make this technology disappear, which, if you understand how technology works, really can't happen. What would happen if the electricity stopped working? You won't worry about your Bitcoin. Banking has been functioning well for 838 years since the Medici invented it 838 years ago. It's been an incredible ride, and the trust industry has extracted, in today's dollars, $7 trillion a year from us to build trust. Risk is an interesting thing. The risk cannot be eliminated. It's like energy. You can only change your shape. You can't eliminate energy. You can convert heat energy into light energy. But now we have this digital system where we no longer need the DTCC to keep the physical piece of paper. We can finish them. We can have an entry in a ledger that is permanent, immutable, and protected by the largest computer network the world has ever seen. And we can have something of value that we can send to anyone on a peer-to-peer basis, which was the goal of the white paper, without intermediaries, which now frees up $7 trillion from the trust industry. This term is intentionally liberated. And what does it do? It comes back into the hands of human beings. And human creativity is the most powerful force in the world. Perhaps compound interest comes second, and the network effect third. But human creativity is the most powerful force in the world. Bitcoin is the safest and is a risky transaction at a later stage. We think it's easily 10 times from here. People like it easily without much effort, and that would be roughly the gold equivalent for the next halving. So in 4.5 years, and maybe it'll be a little bit longer, but we could see that happening. And from there, his value is around $8 billion. Can it reach 80 billion? Which would be another 10 times? Which would be 100 times more from here. So we would say maybe. We would say that Bitcoin is more like a Series C, where you can make 10 times your money. Seems like it's more of a B movie. You can do it 100 times. With Ethereum, we can earn a little more because now we are thinking about an argument. Someone said the other day that it was really interesting. If Solana says they are solving their problems, they will take them at their word. If Ethereum was invented today, would anyone use it when Solana can be used? However, there is a proposal in Ethereum to reduce transaction costs and gas fees. That's all for today. Let us know your views in the comments section below. And don't forget to like this video before leaving. Thanks for watching.